Hello everyone, welcome to our special live session ahead of the non-farm payrolls at 1:30 UK time. So we've got about 15 minutes until the number comes out. So we do these, I mean the payrolls come out typically every the first Friday of the month. So we do these as a quick look, what's been going on with the markets, what we're expecting off this number, and what the reaction is. So we should be done by about 25 to 2. I think we'll hang around for 5 minutes when the number comes out and see what it looks like, really. So with a big surprise last month, I think it beat expectations by about 50,000 more jobs than expected last month. So we'll have a look in a second at what the expectations are. If you've got any questions, you're watching on YouTube, there's the chat box on the right-hand side. So fire in any questions into there. We'll go through some of the numbers, then we'll have a quick look at the major markets ahead of it and watch how they react over it. So let's just go through, you know, for those of you who aren't familiar with what the payrolls are, major monthly economic release, usually announced the first Friday of the month. It's US unemployment data. So it's the monthly non-farm payrolls. You do get regular ADP data released on a Wednesday, every Wednesday, I think, for regular employment. But this is the big one. The monthly non-farm payrolls, often used as a barometer for the health of the US economy. Today, expectations are for the number to keep in mind is 185,000. So that is the expectation of how many jobs were added in the US economy in May. And it's really all about how different is the actual number versus what was expected. Okay, so that's what it is. So it's how much do they beat it by or how much do they miss it by. So to have a look at some of the recent numbers, so we're expecting 185,000 today, which is actually, I think if we went back a month, I'm sure a month ago when we were doing this the beginning of May, the expectations were for plus 185 in April, and it came in at 263. So it beat by almost 80,000 in April. So we'll see how the markets perform today and what it all looks like. But that's over what the last year or so. You can see that the sort of range that we have in the payrolls. Okay, so I think if we've got time, we'll have a quick look. Definitely at some of the markets people are suggesting. If we've got time, we will have time. I will make time. There we go. I'll make time after 1:30 to have a quick look at any markets people want to have a look at. But that's where we are on the payrolls going into today. So let's just, I've lost my trading platform. Here it is. Let's drag that across and just see what's going on ahead of this today. Let's have a look at the major stuff. It's been a good week for stock markets this week after getting hit pretty hard in May. I think the Nasdaq was one of the worst main performers. I think it was down, was it 9% nearly in May, but it's had a bit of a bounce back this week. If I flip this over, here we go. This is the Nasdaq. We'll look at the broader markets in a minute. There's the Nasdaq this week. Good recovery. Started off a week on Monday, sliding below 7,000, but you can see we've had up days the rest of the week. So a strong week for stock markets. Let's take a look at some of the other more mainstreamy markets. Let's take a look at my old favorite, the S&P 500. And then again, we'll watch these markets ahead of this announcement. So you can see really a tough May. Ended April, the S&P around about 29.55. Traded as low as what, 27.38. So lost a couple of hundred points. Big old decline. And you can see this week we've had 1, 2, 3, 4, 5. Well, every day has been blue so far. I mean, clearly today is still going on. We've got hours left until we've got an hour until the US officially opens, and it won't be closed till 9 o'clock UK time. So a lot can happen today. But that's where we are on the hourly chart. And that's what the week has looked like. We had a weaker open Sunday night Asian trade, bit of faffing around, but holding on Monday, and then since Tuesday, stock markets have been really strong, and we are strong so far. Where was the close last night? Last night's close was about here on the S&P, the official close, 28.40-ish, and we are a bit stronger in the overnight market as well going into today. So we'll watch that. We'll watch the Dow as well. The Dow is always a good one to watch over payrolls. We normally get a bit of volatility off the back of that. So let's take that out of the equation. There we go. So the Dow again, good bounce back this week for the Dow Jones. Bit of resistance coming in from May, the third week of May, ahead of that 26,000 area. So it could be interesting if we get a bit more strength today. 26 was quite a big barrier since the third week of May. Sorry, not the third week of May, the second week of May, and then again in the sort of third week, middle of May. But strong bounce back by stock markets this week. Let's take a look at some of the oil. I mean, oil's been moving this week, isn't it? Let's just take a look at that one. Crude oil. Here we go. This is again, because crude oil clearly is very susceptible to what's going on in the wider economy. Can we normally get some half decent volatility off the oil price? So it's been quite a choppy week for oil, trading down briefly below $51 a barrel, but we've seen quite the turnaround since then. Arguably, for me at least, that trend is still down. So it wouldn't surprise me if we saw maybe a bit more pressure on crude oil going into next week. Let's see what it looks like, but we'll watch to see how that reacts over the payrolls. My old favorite, gold, finally got a move on this week after sort of buying in various bits in this recovery since August. The gold price, for those of us who've been bullish on gold, has been somewhat disappointing, should we say, since February. The market has sold off from 1345, came back to this trend line, and has just been hanging around for a month. But we finally had, off the back of some US dollar weakness and maybe some concern over trade wars and that sort of stuff, we finally had a really big move this week in gold, which is good. But I mean, what makes me a bit nervous, we haven't really cracked the old highs from earlier this year, 1347-ish, 1350, let's call it. And we have big resistance coming in at 1366. We do the regular sort of weekly market updates at 10 o'clock on a Wednesday. So to never miss out on those, just subscribe, and we look at these markets in a bit more depth. I mean, I'm sort of rushing it a bit today because I'm aware that 1:30 is when the announcement comes out. But strong move for gold. Maybe it's looking a bit overdone up here. We're a little bit nervous ahead of those old highs from Feb this year. Very overbought on the RSI. It wouldn't be surprising to see maybe that under a bit of pressure next week. Let's see what happens. Let's take a look at Euro US dollar. A bit of a bounce again in the Euro this week, again off the back of that dollar weakness. We've looked at the Euro a lot, clearly. We look at it all the time in the regular live streams that we do. We have seen, I think it's interesting, if it can stage a bit of a recovery next week, we have seen the Euro very much in drift mode over the last, we'll go back to September, haven't we? So what's that? It's like 8 months, isn't it? 8 months. It's just been sort of drifting away, breaks to new lows, then recovers, breaks to new lows, recovers. All a bit scrappy, really. But I think if we saw the Euro break through sort of, let's call it 113.50 next week, maybe we can finally put this downtrend to bed and start looking at possibly a stronger recovery for Euro US dollar for the rest of the year. Let's see. I mean, but we have seen the strength consistently run out of steam for the Euro. And over the last couple of days, it's not made much headway above 113. Let's see what happens. But we'll watch that over the announcement. We'll watch the Dow, and we'll watch the oil price as well. Let's have a look at pound US dollar. So again, we were talking about this, I think it was maybe a week ago. I actually know I did a video on the channel earlier this week saying that even though it's been under pressure, the pound, since March against the dollar, perhaps down at these levels, we're going to see it start to turn around. We've seen a gradual recovery this week. I think it's early days, but really just tying it into how important the December and the January lows were for pound US dollar. We've seen 125, 124 being a major turning point, end of last year, beginning of this. So I was just wondering, with it drifting down below 126, end of May, would we see a bit of strength coming back? And if we get a bit more resolution to the political ridiculousness that's going on in the UK at the moment, you know, with all the leadership contests and stuff. Maybe if we have a bit more clear direction regarding Brexit and everything, we'll have more of a pound recovery. Let's see. And let's have a look at Bitcoin. I haven't looked at that much this week, but let's just do a quick one on Bitcoin, because I know there are some fans clearly out there. You know, I think going back to what we were saying during April on Bitcoin, this break beginning of April, I mean, it's a perfect Harry hindsight trade now, of course, but you know, it did look like different to a lot of the rallies we'd seen in Bitcoin because it broke some key levels. The market had held, we have pushed higher. I still think it's bullish. You know, we traded above 9,000 the other week, dropped back. The problem with Bitcoin is it's so volatile. You know, you've got a market that goes from 9,000 to 7.4 in the space of a week and a half. What's that? A 1,600 point move. It's nearly a 20% move. Yeah, and it doesn't look that drastic on the chart, does it? You just need to have, if you're going to trade it like any other, someone's saying 100K Bitcoin soon, you never know, could happen. You know, you need to, I think, just give it much wider stops than if you were trading it in the normal, you know, if you were like, no, what am I trying to say? If you compare it to trading to that the S&P or trading the euro, you just need to give the Bitcoin really wide stops, or you just get knocked out in the volatility, you know. But for now, clearly, you know, big support back here. I mean, it's 1,400 points away from where we are, and we've had good short-term support emerge at these sort of levels. Like this, I mean, this has been a pretty good area. You know, 7,450, 7,450 for Bitcoin has been, you know, something of good support. But let's see. I mean, you can often see it move over the weekend, Bitcoin, because clearly it's a weekend traded market as well. So we can often see plenty of volatility off the back of that. When it comes to watching where to get these numbers from, going back to the payrolls for today, Twitter's a really good source. I'll show you if I drag across. So I've got a Twitter feed there, and it's the Bureau, it's the BMS. I think it's, if you search for US BMS, it's the Bureau of something statistics. We'll see it when it comes up, and you'll see who you should follow next time round on Twitter. So we'll jump over to that at 1:30 because they do tweet the number out the same time the news wires release it. So you tend to get it pretty quickly. Let's take a look at some of these markets now ahead of the payrolls. Then we'll watch the number come out. Then I'll go back and do any questions that have come through. So let's just take a quick look at the Dow. Let's do the short-term chart, see where we're trading. So this is where we are. You can often see the market react, like what I like to call it, almost like a headless chicken when the payrolls come out, that thinks, oh, this is fantastic. Oh, actually, no, it's not. So I think it is incredibly hard to trade it over the payrolls right off the number, because the first move can very often be the wrong move. Perhaps the more disciplined way to trade it is to wait you know, at least half an hour, or maybe even wait till the US officially opens at 2:30 UK time, so an hour after the number comes out, and see if you've got some sort of direction then. But we can often see quite headless chickeny type trading. So this is where we are on the Dow. So the Dow yesterday, what's the date yesterday? 6th. The Dow yesterday closed about, where were we? Yesterday's close on the Dow is here, 25,670 near enough. So we're about 120 points at the moment in the overnight market above yesterday's close. A little bit weak at the moment, doesn't mean too much until the number comes out. So again, the number we're expecting is plus 185,000. So we'll make this a 1 minute chart. So we'll capture the full drama of what's going on. We've got about 15 seconds until the number comes out. So let me just drag my little tweak deck thing over there so we can keep an eye on that and see how the market reacts. We've got about 4 seconds now, so we should see the market starting to react. We're at 790-ish. Here we go. Here's the headless chicken going on. Okay, so we're seeing a bit of a sell-off. Here we go. BLS, that's who it is. Oh, okay. So hopefully you can see that hopefully on the screen there. Payroll employment edges up by 75,000 in May. So plus 185 was expected, and big miss there. So we had a big beat last month and a big miss today by more than about 100,000 it's coming a bit lower. So and here's the reaction. So you can see that the Dow dumped. So the Dow was trading at, what was it trading at? About 25,800 near enough. Sold off to 25,755, and now it's bounced back. So we'll see. But so I suppose the takeaway from that initially is that while this doesn't show necessarily a strong US economy in May, so not surprising that markets are maybe a little bit nervous. I think this is actually interesting now. If it sells off a bit from here, because yesterday was such a bullish day, and we've had a bullish week this week, do we see the buyers come back in and fancy their chances on buying this on a bit of weakness? So I think it could make for an interesting session this afternoon for the Dow. So weaker than expected payrolls. Let's just have a quick flip around some of the other stuff. Euro up. Okay, so Euro up there. So, and that again does sort of make sense. Let's just make this a 1 minute chart to see the move on the Euro. So the Euro was trading at 112.70 just as the number came out. Jump is now 113.15-ish. So it's jumped about 40 points on that number, the Euro. And again, a bit of headless chicken going on at the moment. And again, you'd see, a weaker US economy suggests that maybe that's not too good for the dollar, and maybe more importantly, it will make the US central bank more reluctant to raise rates. So that again would be bad for the dollar. So we've seen a bit of dollar weakness, a bit of Euro strength off the back of that. So far at least, because often you can get reactions that don't seem to make any sense, but so far at least, weaker stock market, weaker dollar is sort of making sense. And crude oil could not give a monkeys by the looks of it. There we go. So no, nothing really from the oil price. So there's a 1 minute chart of crude oil. So it was about, what was it, 53.40, and it's pretty much there now. So pretty reluctant. Gold, what do we think? Gold surely up. That's what I'm saying. Let's have a look. 1 minute, because dollar weakness, blah 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 blah. Yeah, so gold was trading around about 13.37, jumped $7 on the number, and now what time is it now? It's only been out for 3 minutes. This number, you can often see, like I say, the first reaction can often be the wrong reaction. Let's see what's happening. Let's jump back onto the Dow, see what's going on there. There we go. So the Dow is now only off. Where was 1229? It's off 30 points from where it was before the number comes out. But I think it'd be an interesting afternoon for US stock markets. We've had pretty much a solid rise for much of this week. There we go. There's the hourly chart. Do we have a bit more of a volatile finish to the week today? I don't know. So let's see what happens this afternoon. But it wouldn't surprise me if we got a deeper sell-off in the US this afternoon, US stock markets, that we do see some buyers looking to step in. And for me, for the Dow, probably the big level, the lows from yesterday. I mean, there's still a couple of 100 points, and nearly 300 points below where we are now, down at 25,500-ish. But let's see what happens this afternoon. But going into today, we've had a disappointing number, but stock markets were strong anyway. So maybe we shrug this off. Let's see what happens. Right, let's have a look at some of the questions. So that's the payrolls bit done. If you're disappearing now, thanks for coming along. We'll do this live again on Wednesday. Normal, more calm market commentary. So to never miss out, just click on subscribe and click that alarm bell thing, and you get a message. Right, someone has said US dollar JPM. Do you mean dollar yen? Is that a bit of a mistype? Let's have a quick look at dollar yen. If that was the thing, so dollar yen, you'd think down a bit. Here we go. Yeah. So the really short term, while we're on the payrolls theme, the really short term move. 108.44, 108.16, 15, so moves 30 points on the number. Take a look on the dailies. It's been a really quiet week for dollar yen. We did see a weak end to May for the US dollar. And I think again, earlier this week, we looked at 4 FX markets for June. And again, if you look on the channel afterwards, it's a pre-recorded video. And I did say, I wonder if we'll see a bit of support coming in for dollar yen this week. And I suppose this level really back here, 107.80, these lows from Jan. So I suppose the aggressive trade on dollar yen, it's arguably still a bit weak from those mid-April highs, but we do have it oversold down here on the RSI, maybe a bit of stretching it a bit, but maybe a bit of bullish divergence Will we see going into next week? I think these lows from this week could be important around 107.80. Okay, let's see how it finishes up today. But perhaps this week's lows will be important, and we'll see the buyers come back in. DAX, someone's asked for. We didn't look at that, so let's look at the DAX. It's always an interesting market, of course. The old the German stock market index. If I can find it on my list, I can't find it. Oh, I'm looking at the wrong list. That's why. German 30. German 30. Okay, I've clearly got market blindness today. DAX. There we go. Let's take a look at that. Let's bring the DAX up. So again, not quite as smooth a move this week as US stock markets, but again, a good recovery off those initial lows on Monday. So the DAX traded as low as 11.6 on Monday. We have been as high as above 12,000. So it's been a big move for the week. Bit sideways the last couple of days. Let's take a look on the hourlies. There we go. This is what the hourlies look like going from Monday. Solid rally. Did push higher yesterday. So for my money, that's still bullish. Again, what will be interesting is if we see a deeper sell-off in US stock markets this afternoon, do we see the DAX get dragged down? And I think it starts to get interesting if we push back into the lows from yesterday ahead of 11,900. So if we saw US stock markets under pressure, the DAX could be worth a watch this afternoon. But we've had a good bounce back this week, so I'd still be tempted to be looking for buying opportunities rather than selling ones at the moment. Let's see what happens. LSE, someone's asked for, is that the share price, the London Stock Exchange share price? Look at that. Let's do the dailies as it's a share. Crack in. This has some great trends, this one, over the years, isn't it? Look at that. I mean, absolutely incredible. So since 2016, it's more than doubled in price. It's up, 2.5 times since 2016. Got a great trend going on since December. So even since December, you'd have made, again, Harry hindsight, 50% return on LSE. But if we pick up on the trend on these shares, looking, if I can draw my trend line properly, in something like that ish. I mean, it's a solid trend, isn't it? Solid trend. New highs. I'm guessing that's new all-time highs yesterday. Let's get the RSI out of the way for the moment. New all-time highs yesterday. Breakout. So for me, I would want to be a buyer because the momentum would be on my side. The closest I would want my stop personally on the daily chart, the other side of 51, these lows from end of May. Better stops, perhaps the other side of 50 for me. Any weakness looks like a buying opportunity. Clearly, this isn't financial advice because no one's got a crystal ball, but just based on the current trend, for me, LSE, that's what I've been looking to do. Do you cover S&P? We do. We don't cover the E-mini, but we cover the S&P. Someone's asking. You can trade the S&P with us. You're just trading CFDs on the S&P with us, so you can trade whatever size you want. So if I go to S&P, for example, so in effect you can build your own S&P mini. So I go to S&P and I want to buy it. Where is it? Buy it. I can choose how big or how small to buy. I can trade from as low as 0.01. Okay, so it's not the E-mini, it's the S&P 500 cash, but clearly that the concept is still the same as the E-mini. Google, let's have a look at Google. Let's have a look at the Google share price, someone's asking. It's interesting, isn't it? I think we've seen some of these tech shares under a lot of pressure. We had the big tech sell-off in May, where the NASDAQ was down nearly 9%, I think, in May. 8.9% or 7.9%, I can't remember. And also these big tech shares, Google, Apple, Amazon, and can't remember the other one, Facebook, are a threat of antitrust stuff from the US government because they dominate their market so much. Anyway, here's Google. So peaked at 1285 in April. We're off at 1,044. I suppose, there's a stack of support coming in from just below $1,000 a share. If you were a long-term, fancied a punt on Google, you've got your obvious stops below here, just running below here. We haven't seen much in the way of progress this week. Maybe the more interesting trade is if it does come under a bit of pressure next week and pushes back down towards 1,000. But personally, given the performance of this one, still be looking for the buyers to come back in unless we see broader markets crumble. but for me, pretty oversold as well down here on the RSI. So looking to see if we see the buyers come back in, but perhaps because it's been a really quiet week for Google, there doesn't seem to be much urgency at the moment. Perhaps waiting that one out is a better thing to do. Okay, what else have we got? Russell 2000. Do we cover the Russell 2000? I don't know. Let's have a look. Russell 2000, yes we do. Here we go, Russell 2000. So the smaller cap stocks, if I'm right, for US shares. So there's the Russell, very different to the S&P and the Dow. Big sell-off clearly into the end of last year. Has not recovered and through those previous highs. What's going on here? I mean, we've got. I mean, I would argue that trend is over. That downtrend is over because of the strength we've seen this week. But again, the last 3 days, we haven't seen the same sort of conviction that we've seen in the bigger cap stocks, have we? So I suppose there's a couple of ways of playing this. If you really thought the Russell was still under pressure, I think you've got an obvious place for your stop loss. These May the 28th highs, up above 1522. The market's currently 1501. So if you thought, well, actually, this is just something of a dead cat bounce, got a good place to go short there on the Russell. Or if you wanted to be a buyer, maybe you want to wait it out and see if we get a retest of these old lows. But perhaps that's the better trades is short with stops above 1522 at the moment. Because it's been pretty sideways over the last few days. Let's see what happens. FTSE 100. Let's have a look at the FTSE. Let's bring that one up. We are whizzing through this stuff today, aren't we? Let's have a look. FTSE. Have I got it up here? No. Okay, hold on. FTSE 100. So I reckon with the pound coming back in the last couple of days, is that taking a bit of the edge off the FTSE? Oh, the FTSE's had a good run. The FTSE's had a good run. So again, like these US markets, it was a bad May. The market got dragged lower, but we've got big support on the FTSE. I think the really big level for the FTSE is these old lows from the end of Feb, around about 7,040. The big support from 7,000. The market on Monday did go down to 7,080. Strong bounce back, but I suppose again a bit like the Russell. Actually, we've got some hurdles coming in, up at just ahead of 7,400 on the FTSE. Maybe next week we will see, after a strong week, some selling come back in. But I think with these indices, in the short term, for the rest of today, it's more about what happens with the US markets this afternoon. Buy or sell gold, somebody's saying. So for me, like I've been long gold for a while. I think that recovery. Oh God, who put those Fibonacci's on? That recovery is still going in the price of gold. I'm not quite sure what that big arrow is doing there. That recovery off those August lows, is still going in the price of gold. The time to buy, again, Harry hindsight, was the retest of that trend and about 1270. That trend is clearly up. My only question would be, if I was a buyer now, where's my stop loss going to go on gold? And I don't know, unless you have a really aggressive stop loss underneath today's low, I don't know. So for me, the level to watch are these old highs in gold, about, let's call it 1350, right up here, because that was a problem in February. We're very overbought. Are we due a little bit of a correction in the gold price after this pretty big run it's had in the last couple of weeks? That's all I would say. So even though I think clearly that the trend in gold is up, are we going to struggle a bit up at these levels? So I think maybe we'll have a clearer outlook next week on gold. Marks and Spencers, I should say I've got shares in Marks and Spencers, so I'll just qualify that. They're not doing very well at the moment. I think they're doing a rights issue, aren't they? Marks and Spencers. Where are they? Hang on. Let's try putting in the code. Why isn't that one coming up? I can't find it on here. Oh, I can't find that one. And I haven't got my other platform open. If you could do me a favor, we'll have a look on Wednesday. I think next Wednesday, if you're here on Wednesday, mention it then, because I think we had an uptrend in Marks and Spencers, and it has been not looking too healthy of late. I think it's broken some big levels. M&S. So it's not looking that bullish, but I can't bring it up at the moment. Pokemon cards. One day there will be a market in Pokemon cards. UPS, someone's asking, so United Parcel. Look at those. It's interesting actually, Dan. I mean, it's been something clearly of an underperformer over the last 18 months or so. But down here, you know, we had these lows set in December in the broader market sell-off ahead of $88 a share. Good bounce back. We've pushed back over the last, what is it, since April, back down to this area. So I suppose, you know, the aggressive trade here is to assume these old lows are going to hold. Yeah. Would you want to buy it up here though at 98 with a stop the other side of 89? I don't know. But maybe if we drift back towards these lows, you know, clearly 92 was a big level, 89 was a big level. Maybe the opportunity there is if we see it under a little bit of pressure. Let's take a quick look at the Dow when I'm jabbering away to see what's going on. You see it's clawing back some of those losses. So we've rallied about 25 points off the payrolls low. So let's see what happens. That's it, I think. Aussie dollar. Let's look at the Aussie dollar. Then I think we'll wrap things up after that. I think we're all done after that. Yeah. Aussie dollar, US dollar. So I'm guessing because the US dollar has been a bit weak this week, we should have seen the Aussie have a bit of a bounce. There we go. So we have seen it's quite scrappy trade again, isn't it? So we did have something of correction going on. Bit of stability, late May, breaks out the trend line, strong move, June the 3rd. So it's interesting, I suppose, the Aussie dollar, because you could say it might be clearer on the hourly chart. We'll flip over to the hourly. Is it trying to make a recovery? Are we seeing, look at that move there on the Aussie. Are we seeing over the last 2 weeks or so the start of a recovery in the Aussie dollar? That's an interesting one. You know, I think it's maybe more interesting if we see it drift back towards 69.50 because we've got this trend line coming in. But for now, at least, you know, we had a sharp jump on the payrolls. For now, at least, we do have this recovery trend that's been going on for a couple of weeks now. So I'd be tempted to be looking for buying opportunities. But what do I know? No one's got a crystal ball, have they? Okay, so there we go. We've got, it's 45 minutes till the US markets open officially. I think it'd be an interesting afternoon in US stock markets to see what the reaction is to this big miss, relatively big miss for the unemployment numbers in May. But, you know, all this week we have seen strong US stock markets. So it would not surprise me, as we're seeing with this Dow now, if we saw people looking to step in on weakness, seeing it as a bargain. Let's see what happens. Okay, we'll wrap things up there. Thanks very much for coming along as usual. We'll do the usual Wednesday live session at 10 o'clock next Wednesday. To never miss out, just push the subscribe button. And if you are watching, if you can push on subscribe, because if we get subscribers off the things, we can carry on doing them, to put it bluntly. So non-farm payrolls, that's the end of that. Find out more about the company, go to Capital.com, www.capital.com, open an account. Any questions, drop me an email, and you can follow me on Twitter at Jones Markets. Okay, thanks for coming along, everybody. It's quite an interesting one in the end, I think, because we had such a big miss. And we'll come back to it all next Wednesday, and enjoy your weekend.